Have you ever seen a chart where price is going up and down at the same time? Higher highs, but also lower lows? It feels like the market has completely lost control. That's not random. That is called the megaphone pattern. In this video, we'll cover three things: what exactly is a megaphone pattern, the psychology behind it, and real cases of bullish and bearish megaphones. Let's begin. A megaphone pattern, also known as a broadening formation, is when price starts making higher highs, lower lows. Instead of tightening like a triangle, the market is expanding. Each move becomes more aggressive than the last. This is not trend, this is instability. Now let's talk about the psychology behind this pattern. At first it looks like strength. Price is making higher highs, so traders think the market is bullish, but at the same time, the lows are getting lower. This means one thing: there is no control. The market is not trending, it's arguing. The bulls are saying we're breaking out. The bears are saying we're breaking down. Smart money is saying thank you for the liquidity. Let's start with bullish megaphone. This is Bitcoin in daily time frame. Here we can see a megaphone pattern forming right after the 2022 bear market. Price is making higher high and lower low. The market is still volatile. Bulls are pushing price higher, while bears are still fighting back. But if you look closely, buyers are slowly gaining control and price continues to push higher. And then comes the most important part: the breakout. When price breaks above the megaphone structure and comes back to retest, that is your confirmation to enter the trade, that this is a bullish megaphone. A megaphone pattern doesn't predict direction. Professional traders don't rush into this pattern. They wait for the market to show its hand, because in a megaphone, price is loud, but direction is unclear. Now let's look at the bearish megaphone. This pattern usually forms after an uptrend. At first glance, the market still looks strong. Price is making higher highs, but at the same time, the lows are getting lower. This creates an expanding structure: higher highs, lower lows, increasing volatility. This is not strength. This is instability. In many cases, this pattern represents distribution. And then comes the key moment: the breakdown. When price breaks below the megaphone structure and fails to reclaim it, that is your confirmation that this is a bearish megaphone. This is why traders don't rush in early. They wait for confirmation. Don't try to predict the breakdown. Trade the breakdown. A megaphone pattern doesn't tell you where price will go. It tells you the market is losing control, and when control is lost, the move that follows is decisive. If you find this helpful, please visit InvestorHubX.com for more lessons just like this. We are building a complete learning platform designed to help investors like you master technical analysis, stocks, cryptocurrency, commodities, precious metals, property investing, and more, step by step. You will also get access to custom indicators and in-depth video courses to support your learning journey and take your skills to the next level. To summarize, the megaphone pattern is a sign of increasing volatility, where price makes higher highs and lower lows. It reflects a market in conflict, with both bulls and bears fighting for control. The pattern itself is neutral, but once price breaks out of the structure, it often leads to a strong move in that direction. If you found this lesson helpful, please give the video a thumbs up, subscribe to the channel, and turn on notifications for future lessons. I'll see you in the next video.